Welcome to this week's Real Money Show. This is Jerry Karai, and I'm joined by Nick Battaligan, and you're joining us here at Guildhall Wealth. The website, guildhallwealth.com, the phone number 1-8778-SILVER, and you have now tuned in to the show that is by Canadians, but for global citizens who want to know everything about the gold and silver market, how to get in, and then remember, it's all about the physical. It's all about if you can't hold it, you don't own it. There's a lot of stuff going on in the markets, and I wanted to first and foremost just welcome Nick Battaligan to the show. Nick, this is your first time on the show. He's been with us for about, is it 2 years, 3 years?
Just over 2 years.
Just over 2 years. He came in from the vault. We actually stole him from the vault. He was working at BRICS, and he did such a great job, understood the inner workings of the physical market and how the vaults worked, right, Nick? And it's been 2-3 years now. And what are your thoughts about the metal markets?
Yeah, I mean, it's crazy. Definitely not something I thought I would get into, but I mean, Here we are. And even when I first started, I got in the market, bought silver at about $17-18 an ounce.
That's right. Well done.
So I mean, I'm nothing but smiles here, and we're seeing that with a lot of clients these days, making a lot of money.
Yeah, that's for sure. Now, Nick, he specializes in the first home savings accounts. I got that correct? That's the first home savings account. We could probably talk about that a little bit later, as well as the RESP plans. Nick is the go-to for setting up accounts for your kids, because this is all about if you can't hold it, you don't own it. You want the physical precious metals to safeguard and protect your portfolio, protect your wealth. And it's not just about a day trade, right? It's about planning for generational wealth builders, and who better to build for than our kids? But there's a lot of news in the market we want to talk about in the precious metal space. And the week that was so far has just been an amazing week. Sorry to our listeners, we didn't have the show on Friday. Jeremy's been battling a cold. He lost his voice. And just like silver, we're just, back and forth, rolling with the punches, and we're now broke through, and we're now seeing 12-year highs in silver. The week that was, it was just a stellar market. As we closed the week last week, we were closing in on talking about the largest buyer in silver. I mean, a lot of other companies talk about big buyers. You always often hear about maybe an Elon Musk getting into a crypto or some type of huge whale buyer, but guess who's buying silver? Russia. An entire country is getting involved in buying the asset that is so finite and small and so important. It's beyond precious, right? You need silver in almost anything and everything. And as we advance technologically, the more and more silver you just need. So Russia, major buying, adding silver to their portfolio as their reserves as we head into this week, the week of the 21st. The BRICS meeting begins.
Yeah, I mean, full disclosure, I was away last week up in the great north of Yukon.
You were mining, right? You were mining for gold.
I was mining for gold. Not exactly, but I was away last week and wasn't really on my phone paying attention to what was going on. And I did book an order for one of my clients when gold was around 2670. And then the next day I checked and it shot up right over 2,700. And same with silver, $30, $31 silver now, 33, 34. It's crazy.
Exactly. So looking at gold, the week that was, we started the week last week. Gold was about, as you mentioned, 2640, up $85 for that week, smashing through all-time highs again, now gaining mainstream attention. Reuters and all the major banks are jumping on board. Gold up 3% on the week, and we're now hovering around the 2730 mark. Can we break 28? We'll see. There's a lot of news coming up on the week. We'll talk about the BRICS a little bit. And then silver, the week that was last week, on the 14th, silver came in starting at $31, 31 and change, up 8.2%, up $2.60 in 1 week, smashing through, breaking 12-year highs, and we're sitting at about $33.75 roughly US. So far on the year in Canadian dollars, silver up 45% in Canadian dollars, 38% for silver in Canadian dollars, and gold up 38% in Canadian dollars. So you're mentioning, Nick, your clients who you purchased precious metals over the last 2 to 3 years, they're all doing very well, aren't they?
Yeah, I think the only clients that I have that aren't in the positives are ones that I would have just done last week or 2 weeks ago.
Yeah.
You know, everybody else, like you're seeing green, which is great.
Yeah, and the only cost to get in would be the cost to buy the physical. We were talking about, you know, this is the physical. If you can't hold it, you don't own it. And central banks, we're looking at big buyers, Russia, they're coming in the market and they're not buying certificates. They're not buying the ETFs. It's a big message to us. It's a big message to our listeners as we try on the Real Money Show is talk about the real money. And what is real money? Aristotle had to put together the 5 characteristics of what money is. It has to be portable. It has to be durable, recognizable, scarce, and divisible. And as we talk about physical, that's the one cost you have to overcome. Because when you're buying gold, you're looking at buying at about $100 US over spot, and maybe around $3 to $3 to $4, $5 over spot in silver. Most of it comes from the fabrication. You were talking about a video that you saw from PAMP.
Yeah,
Those amazing videos.
Yeah, I saw on Instagram last week actually when I was away a video of PAMP over in Switzerland. They were making and fabricating their 1 ounce gold Fortuna bars. Man, it's a process, but it's really cool. I'll try to throw it. I'll try to find it on YouTube and throw it on the newsletter. But you really see the cost that goes into making the actual physical product. And
certainly.
It's pretty cool.
Certainly is. And, you know, it's something that, you know, we have to overcome as a firm as we're looking at premiums. Premium is this thing that we have to, Guildhall has to go to the market, go to the wholesalers and buy physical. And we can't buy at spot. We can't buy that paper price that you see on the news, on CP24 if you catch news, or on BNN, wherever you get your silver spot prices and gold spot prices. If you want that spot price, you got to go to the bank and ask for a certificate. But no one wants the certificate. No one wants an IOU. Where is the trust? So you buy the physical. And for Guildhall, the 2 factors that go into that premium for Guildhall, the first one, fabrication, the mining, as you did in the Yukon, the melting, the minting, fabricating.
Yeah. Full disclosure, I didn't actually go mining for gold in the Yukon. It would have been cool.
We'll play that up a little bit more. No, but, you know, this is where some of the gold for the RCM comes from. So the big Yukon gold rush and gold strike, some great gold product coming out from the Yukon. But fabricating it, turning into a finished product, which is what you'll realize, okay, you're paying a little bit more for a coin because of the artwork that goes in, and it's cheaper to buy larger products. So if you're looking at investing and making money in the market, you want to try to get as big as possible to lower your premiums, lowering your costs. But if you are one of those clients, we have many of them who are really preparing for the worst case scenarios, the doomsday scenario, the Mad Max scenario, then you want to get the smaller items. You're willing to pay a little extra just to get that divisibility.
Yeah, and I mean, if you're buying smaller products, it gives you the opportunity to cost average.
That's another one.
Crawl, walk, run.
Crawl, walk, run. Crawl, walk, run. We've often advocated that type of approach in the metals market, but as we're heading into the home stretch here in precious metals, because this is just the beginning, and we're going to talk about why this is the opportunity of a lifetime. If you feel that if you have missed the boat in precious metals, that's not the time. There's many more reasons for topside potential in the market, Nick, versus any downside potential. And just going back to the physical, besides the fabrication, the other would be supply and demand. And right now, the supply is dwindling in silver. The premiums are starting to tick up once again. And this is because of supply and demand factors. And then a retail premium. We would add our small, fair premium on top of our costs. People ask, well, how does Guildhall make your money? How do you make your money? Well, you add a premium. Whether you want to call it a commission, a premium, or retail fee, guess what? It's a commission. Call a spade a spade. I know there's some dealers out there that say they don't charge commission. Well, guess what? They just rephrased the terminology. Nick, your thoughts on that?
Yeah, I mean, 2 weeks ago, I did a little research. I called around to some other places just to see kind of what the process is and how they do things. And some Jerry mentioned about commission or don't charge commission and whatnot. everybody does charge something, right? Whether they tell you or they don't, right? The difference is we'll tell you, like we'll be transparent. We'll tell you what that is exactly, right? It's the same as going to Walmart. You know, you buy oranges for $3 a pound. Do you think Walmart bought oranges for $3 a pound?
No.
Right? They just don't tell
exactly.
you what they paid, right? And you just pay it.
Yeah. Well, we believe on transparency. I think we have a full disclosure when it comes to that. We always show you the rates. What is the currency rates? What is the US rates? Because we believe, you know, if you're coming to gold and silver, there is a loss of trust somewhere. You know, there's uncertainty somewhere. And if we're not being full disclosure and transparent, this is just what we've learned over the past 20 years. You know, we're not a fly-by-night firm. All we do is precious metals and natural fancy color diamonds. Hard assets is all we do. We're an inch wide, mile deep hard assets. And you're coming to the professionals who know, first and foremost, we're not here to put a number on you. You're not a number. Yep. You're more than just a number. You're a person with a story, a family that you're looking to protect. And we want to build that trust. So we're going to show you all of our fees. And we've done this. Over the last 20 years, Guildhall has provided market knowledge, support along the way. And Nick, you have supported us tremendously over the last 2-3 years. We are very thankful for your service, but the best is yet to come, not just for yourselves, your kids in the market who are, you know, and you're continuing to open up. How many accounts do you open up a week? I mean, you're on fire.
Lately, it's been a lot more. Referrals have been a big one, which is good. So if you know anybody that might be interested, definitely have them give us a call. Right now, what's really popular, even just this morning, I mean, my first day back after being away, and right before the show, I opened up two first home savings accounts, and then another one tomorrow. And it's I don't know what happened the week that I was gone, but coming back to these accounts, it's great.
Yeah.
Helping people know that buying a home is a reality.
Yeah.
Right? I'm in that same boat. I haven't bought a home yet. I'm on the younger side of things, and my wife and I, we've been trying, but it's been next to impossible. But with this account that the government introduced, it's
one way. It's a key.
It gives a light.
Yeah, absolutely.
A little bit of a light, and the fact that you could hold metals in it is even better.
And that silver lining, getting that silver in your portfolio in the first home savings account is the way to go. We're going to talk about that opportunity after the break. The website, guildhallwealth.com, and the phone number, 1-877-8-SILVER. We are here, your specialists, to get into the physical precious metal space. Guildhall, we've been offering the most efficient and direct routes into the physical precious metal space so that you can protect your wealth entirely outside of failing digital banking systems and failing fiat currencies. And as we look forward to this week, there's a lot of news to keep track of. We have the BRICS summit that just began, or it's beginning tomorrow, and that's happening in Russia. Have you heard about the BRICS, Nick?
Yes, I know what the BRICS are and what they plan on doing, but there's talk of this new currency. Am I getting that correct? You
got that right. So over the last, I would say, over the last 5-10 years, central banks around the world in countries such as, well, Brazil, Russia, India, China, and South Africa, it's an acronym, so BRICS, it's made up of those countries, and they're loading up on gold as a result of, I think it had to do with the sanctions that were laid upon on Russia. So it's supposed to be this world's currency, the US dollar and the US SWIFT system, where you can transact and you can send money along the SWIFT system to various countries to pay your creditors. But they were kicked off of the SWIFT system. And I think Putin was commenting last week, and that it was a currency that we can all use, but not Russia. Russia was kicked off. So as a result, many other countries had to pivot away from this system. And because it could happen to anyone. It could happen to India. It could happen to China. It could happen to South Africa, which is why they have band together. So they're loading up on gold because there's a lot of uncertainty and volatility on this geopolitical and macroeconomic front, which has accelerated the trend of de-dollarization to preserve the nation's purchasing power of the reserves. So they have seen the time, as we are, the time to now convert away from paper US dollars and treasuries and start to denominate their wealth into their own currencies. So this is very refreshing as opposed to a one world currency. We don't want that. we're honoring each other's currencies, and they're also using gold in the system. So a lot of news about that, because I don't know if you saw while you were away, Nick, but there was a release of a BRICS-Pay. So BRICS-Pay was actually released. They introduced it through a Visa card, or like a prepaid card, a MasterCard of some sort. It says BRICS-Pay on it, which then had a QR code. So you would scan that QR code, load it up on your phone, download the app, and then you're now able to load your own currencies and potentially transact. I don't know the inner workings, but someone posted a picture of the BRICS-Pay app, and you can scroll and see all these the multi-currency system, as well as gold at the bottom of these options. You could use your Indian rupee if you wanted, or Chinese yuan, renminbi. You can also use gold as a payment. So gold is being reintroduced as currency because it is money. And I just thought that was so amazing. And we can only imagine what they're going to be talking about, what Russia is going to be talking about, and why they're also including silver in their reserves at this BRICS meeting. So the BRICS summit begins on Tuesday, October 22nd, Wednesday, and it concludes on Thursday. So it's a lot to look forward to and to really unpack that. But yeah, the unit currency is that one. And a lot of people have some questions about that.
Yeah. So one question I have: why underlying unit basket contains 40% gold? What is that? What does that mean?
So if you go on to there's a unit ecosystem paper that you can get. It's public. So if you're looking at the currency, you want to know what the unit, which is their currency, what it is all about. You will read that it's actually containing a basket of 40% of its weighting in gold, and you can go through that paper, and on page 11, it talks about why this unit basket contains 40% gold. And it writes, the gold ecosystem serves primarily the function of the natural constraint on the emission of unit tokens and the anchor of intrinsic value. And the intrinsic value is found, which is the common denominator of trust, is gold. Our research indicates that 40% of the gold is the optimal proportion to anchor the value of the underlying unit basket and to make unit eligible for mass adoption at the initial stage. Increasing the share of gold above 40 would likely lead the unit price to being dominated by the price of gold, a scenario that would make the unit less useful in fulfilling key functions of money. So they're using the backing of gold, but also giving the flexibility of other currencies. And what this paper basically shows us is the intrinsic value of gold, and why, going back to the definition of money and why we talk about this on the Real Money Show, is that gold is money. Silver is money. It has also been used as currency, a medium of exchange, but it has intrinsic value that goes beyond human existence. This is always something that has been, and it will always be there to back up a currency. When you have the ability to be recognizable around the world, beyond creeds, religions, language, everyone understands what gold and silver are. Looking at various weddings, you can go to a Polish wedding or an Indian wedding or a Chinese. Gold is a staple in almost every culture. And I think when what Voltaire talks about, the paper money and the systems, paper money eventually returns to its intrinsic value of zero. And if you look at the purchasing power of the US dollar and the Canadian dollar over the last 100 years, Canadians are struggling, right? We're seeing things going through the roof in terms of its price, and how do we navigate? And these are the things that we talk about with our clients. When you pick up the phone, or if you get a call, what would be some of the reasons why someone, like from a personal reason, is looking at gold, like a central bank is looking for gold? They want to become their own central bank. What are some of the things that you've experienced recently?
Safety. Today, actually. Today I was talking to somebody who wants to get involved and whatnot. They got a large inheritance from somebody that unfortunately passed, and they received that. He went to go take it out from the bank, and they said no. The bank said, no, you can't touch this. We have to hold on to it for 5 days. And he's like, well, what are you talking about? Right? And so the first thing I told him is like, well, I can't guarantee where gold is going to go. I can't guarantee in 5 years where it's going to go. I don't have a crystal ball. But what I can tell you is that it's safe.
Yeah.
Right? it can't be taken away from you. It can't go to zero, and it's physical product, right? So unlike the banks where your money can just go to zero right overnight, bank holiday, whatever they call it, right? Gold is safe. So I think that's a thing right now that I'm kind of focusing on is the safety of it.
Yeah, as much as we're going to talk about the opportunity in precious metals and why this is going to continue and to be a life-changing experience for everyone in the market, whether you have a few ounces in the market or thousands of ounces of silver in the market, this is going to be life-changing. But first and foremost, it comes down to physical gold as wealth insurance. Nobody today, especially with how tight things are looking to roll the dice with their wealth and start gambling their money away, especially with an inheritance. And this is something that was, your ancestors worked hard for, inherited as well. And to throw the dice and want to gamble that away, people are still very responsible with their money.
Yeah,
you want to share?
You don't want insurance after the hurricane. You want it before. Right.
Exactly. And what is so special about physical gold? I'm going to talk about some of the insurance factors. Well, for the first thing, it has a millennial record as a store of value. It's the most widely recognized and universally accepted valuable in the entire world. And silver as well. I want to throw that in there. Always accepted and readily liquid at transparent prices virtually in any market around the world, in any market condition around the world, across all the world's financial centers without exception, around the clock. Think about that. New York, London, Zurich, Dubai, Hong Kong, Singapore, Sydney. This market is trading all the time. It's never closed. You talk about blackout periods. We won't have that. ICE 9, Jim Ricker talks about, respected author, lawyer, talks about this scenario where if you hold shares in a company and everyone wants to dump the shares at the same time, guess what happens at the bank? They shut the circuit. They short the circuit breaker, and you can't get out of that stock. You can hold the best stock in the world. I don't care what it is. But when you want to sell, and that's what it comes down to, and that's why central banks around the world care for gold for two reasons: liquidity and independence from all of this financial madness. And financial madness is what we're seeing today because of the fractional reserve banking system that we have. This is global. The fractional reserve banking system is, in my opinion, the moral hazard. When you deposit your money in the bank, you may think that your money is safely stashed away in the bank's vault, ready for you to access at any time. However, this reality is far from the case due to this practice known as fractional reserve banking. What it is, it's based on an interesting premise called fractional reserve banking, a banking system in which only a fraction of the bank's deposits are backed by actual cash on hand and are available for withdrawal. It used to be about 10%. You deposit $100, they would hold back 10% and loan out or invest or do something with the 90%. Well, that 10% has dwindled down to, some say, fractions of a percent or even zero. I think the situation in the U.S. is actually zero. And people know about this. And people see through the banking system and even the insurance coverage, FDIC coverage, CDIC coverage. There's not enough in those coffers to cover all of us at the same time. I would understand if it was if it was some fraud that hit your account or maybe your trust account or corporate accounts or few corporate accounts, but not everyone at the same time. There was a big issue with the insurance. And when the trust issue happens, what happens is what people are doing today. They're rolling out of their banks and they're putting into physical precious metals outside of the banking system, the way the central banks do it. The Fort Knox and West Point, these are two depositories, not a bank. The U.S. Treasury does not use banks. Thank you very much. And when we're seeing right now major bank closures in the first 9 months of this year, U.S. banks closed a total of 754 bank branch locations, significantly impacting access to banking services for many customers. Bank of America led all those closures. Now we were talking about, it was Buffett who's been dumping Bank of America shares. I wonder why. Well, they shut down 132 locations during that period. Other major banks also contributed significantly to the total. And these are not just small regional banks, as we used to discuss. These are major banks. We're talking about U.S. Bank, 101 branches closed. Wells Fargo, 92 branches closed. J.P. Morgan, which is down 1% today, 90 branches closed. TD Bank, 52 branches closed. The Green Bank was involved in some horrible news the other day with money laundering, apparently. I'm not going to get into that, but people see this and don't want anything to do with that type of exposure. So your quick thought on some of that and regarding safety before we go to break.
Yeah, I mean, banks fill the needs of, paying your bills and everything like that, getting your paychecks. But holding it in there, you never know what's going to happen.
Yeah, like your nest egg.
Yeah, you never know what's going to happen. I mean, I tried to convince my 84-year-old grandpa he sold his house last year. I tried everything I could to get him out of it, but he's just stuck on, nope, banks are your friend. Banks are your friend. They have your best interest, and they don't. Right? At the end of the day, they're going to cover themselves first before anything else, right? And so having gold, having silver in your portfolio acts as that nest egg, acts as that safety and that insurance, and you can't really ask for anything better than something physical. 100%.
Now we're seeing unrealized losses by U.S. banks 7 times higher than the 2008 financial crisis, and the chart looks just off the charts. But the excitement, gloom and doom aside, the excitement is in precious metals. There's a lot of topside potential. We're going to talk about that and this opportunity after the break, but you're tuned into The Real Money Show, the website, guildhallwealth.com, and the phone number. Give us a call, 1-877-8-SILVER. Here to help you get into the physical precious metal space, whether it be for taking home, storing in the vault outside of the banking system, direct ownership, fully insured accounts, segregated, allocated, and titled to your name, or if you have an RSP or a TFSA or a LIRA or a LIF. These are registered accounts that we also help with. If you're an American, we also handle IRA accounts. And a lot of exciting things happening. We will help you along the way. We want to meet with you. Coffee is always on. And we want to find out what it is. Why are you looking at precious metals for the first time? Are you looking for wealth insurance? Or did you hear that the precious metals market's on fire? You want to jump on board? Because I think we talked about that last week is people normally buy when the market is rising, never at the bottom. It's a tough thing to actually, try to pick the bottom in these lows in the market, especially when you have another underlying currency, because us being in Canada, we use the almighty loonie, which is coming off some 14-month lows versus the U.S. dollar. And it's probably going to get worse, Nick, because on Wednesday, the Bank of Canada is ready to do a jumbo cut. Have you heard of that one? A jumbo cut along the way.
I really need to catch up.
Well, apparently they killed inflation, Nick. They succeeded. And
no more inflation?
There's no more inflation. Well, it's below their target.
Set to go.
Yeah, ride the rocket. Ride the rocket. We're going to ride this loonie down into the depths of where this thing goes, because if a jumbo cut happens, if they go in at 50 or maybe a 75 basis point slash, we're going to see the loonie. Right now, it's hovering at 1.3738. It's lost about 400 basis points over the last two weeks. Really rapid drops. But we could probably see this thing go into the 140s real quick. And they have a series of rate cuts to do. But, as Reuters wrote today, inflation is not dead. It's just sleeping, or it's a slumber. They used to talk about it being transitory. But they're describing and trying to lull this market, lull us to sleep using these terms and terminology. But inflation cannot go away. When you're cutting interest rates is all you had. In 2020 for COVID relief, they printed 4 times the size of our economy here in Canada. We have a small economy as is. We're the G7. I think we don't produce as much anymore. The GDP's just fallen off the rails, and which is why they're justifying this huge jumbo cut now, because they not only killed inflation, but the economy is just getting worse. So be mindful of the loonies that you're in, maybe convert into US dollars, or there's some strategies that we'll employ. But looking forward, we still have the Bank of Canada and then the BRICS Summit this week, and then some U.S. inflation numbers and new home sales. But we're just really reacting to all of the shenanigans that is being done in the banking system from the Bank of Canada. They printed all this currency very, very rapidly, unleashed 40-year high inflation, not just in the U.S., but here in Canada as well. And we're scratching our heads. Well, where did this inflation come from? We got to blame the immigrants now because, that policy came in after the mountains of money printing, right? And, where this is going to lead, this is all about converting out of fiat paper currencies that they're just printing, and they're financing. Who knows what they're financing? The federal government here in Canada was involved in a slush fund that money went missing. Did you hear about that one before you left, Nick?
No, not quite. But
so the Liberal government here in Canada had a fund that was going towards climate change initiatives, and apparently $400 million was lost. And not to mention the losses with this slush fund that went somewhere. Well, Trudeau probably knows, and their friends alike knows where the money goes. Well, guess where that money came from, Nick?
Me.
Exactly.
You.
Me.
All
you.
of us.
All of us. And not only that, the Bank of Canada, which is supposed to be the responsible financial, stewards for our wealth here in Canada, they lost $2 billion as well. So how do they bail themselves out? Continually. They will just continually print on the back of our kids and our kids' kids.
And we pay for that later. Nothing's free.
Nothing is free. It will continually be paid and guaranteed by us Canadians. We have always been. This is exactly what the fractional reserve banking system is all about. You need to be in that bank. You need to be in that banking system so they can continue to print a little bit more. And when you try to take your money out, you can't take out more than $3,000.
Or what do you need that money for? Where's it going?
What else? The W5H, who, what, where, when, why, with your own money. And not only that, we look to the U.S., which is the world's reserve currencies leaders, where we look at the Federal Reserve, where the Fed is now notching a historic record of $204 billion in cumulative operating losses. That's losing over $1 billion a week for more than 2 years. And this is it. If our central banks, which is responsible for our currency, was just like a publicly traded company that you could buy on the market, and if they had been bleeding operating losses of more than $1 billion a week for more than 2 years, there would definitely be a change of leadership at the top, wouldn't there be? But Fed Chair Powell and Tiff Macklem here in the Bank of Canada, they have their jobs. And what is their job? Tighten that inflation noose, or loosen the policy, bring out the helicopter money, and say goodbye to your savings. And if you're parking your wealth right now, because there is uncertainty, despite what we're seeing on the stock markets, because the stock markets are defying, they're anticipating helicopter money, so the stock markets love that. They love the bubble money. So, but it doesn't last. Usually after rate cuts happen, the recessions happen shortly thereafter. So this is it. If you have been on a defensive and you went to a cash position, well, guess what's happening to your cash? Your cash is not a good store of value. It has never been. It's lost over 94% of its purchasing power since the Bank of Canada began. The loonie has lost actually 96% of its value since 1915. And that's the case of all paper currencies. No other currency is backed by gold. And this is why. Paper money is just simply losing buying power, purchasing power. Our hard-earned dollars are dwindling as a result of this cronyism. They're going to continue to print. And what is the escape valve, Nick? What would be the escape out of this situation?
Gold and silver. If you're gonna store cash under your bed, why not store silver maples or gold maples? Something that will grow and beat inflation.
Exactly. And with Guildhall, You could buy direct. You could purchase gold and silver to take home, or even at the website, guildhallpreciousmetals.com. I want you to check out that website. That website's working fantastic. The alerts are working now. So if you're trying to buy the dip, get into US dollars and buy that dip. We take US, we take Bitcoin, we take Canadian dollars, and secure your wealth outside of a digital banking system that they can freeze, that they can hack, anything digital. I mean, how many passwords do we have right now, Nick? We have, I think, of about 8 passwords. I can't remember them all.
Just to do our job, yeah, there's about 8 or 10 for us, right. For us to work.
Yeah, exactly. And owning it away from a failing currency system. And you want to do it with Guildhall, the professionals, over 20 years plus in the business. We're your professionals for RSPs, physical precious metals RSPs, and we will walk you through that process. Before you know it, you'll have the gold and the silver in your RSPs, positioned and primed for some top side potential, which we're going to get into at the end of the break. The website, guildhallwealth.com, and the phone number, 1-877-78-SILVER. Nick, it's been a thunderous show. We're in for a thunderous rally, continuing rally in precious metals, and a lot of people are thinking, can this continue to go? What are your thoughts on that?
Yes, I mean, it definitely can continue to go. I mean, we're at an opportunity right now where generational wealth can be made or missed. And you have to make that choice on which route you want to take. And
you're absolutely right. I think we over the course of the last week and a half, we've been doing some housekeeping here, and some people that sold metals a long time ago are still sitting in cash. Cash is not what you want to be in right now. Cash is not going to grow your wealth. Cash is going to be eroded. The purchasing power of that cash, you'll just need more and more year over year. That is the effect of inflation when they expand the money supply. And when that's what all they have done. Right now, there is a $100 trillion debt bomb in the world. That's the global debt. The U.S. just crossed $35 trillion in debt, and we have a situation at hand here. We have gold and silver cycles that are happening right before our eyes. And if you're sitting here on your hands, now is the time to get off of your butt and get into the market. Give us a call and get some silver and gold in your portfolio. There's 2 things happening right now. With all that debt, you can't just cancel it away or forgive the debt as what Biden wanted to do for student debt. You can't do that. It needs to be refinanced, and you do that through a gold or silver revaluation. A gold revaluation account is on the balance sheet right now of the Dutch Central Bank. You could look that up. They are ready to revalue the gold price. That's number 1. Number 2, we have gold and silver cycles. And these are the 2 must-know gold and silver cycles, making this the opportunity of a lifetime. Because right now, in the face of today's global financial challenges, we are also seeing significant opportunities. Please take notes on this, particularly in precious metals, which are both right now in 2 exciting cycles. Quick overview. The first one, the U.S. rate cut cycle. We are currently in a U.S. rate cut cycle. Bank of Canada is ready to cut. The only central bank that's not cutting is the Bank of Japan. That's coming up on October 31st. But historically, silver has surged an average of 413%, 4 times your wealth during the last 3 Federal Reserve rate cutting cycles. As you can see in this chart pattern below, it's a very strong chart which goes back to the year 2000. And what this chart signifies is it presents a promising outlook for silver. But then gold. We are in the midst of the 3rd super cycle for gold, which began in 2016 when prices of gold hit a low of $1,050 per ounce. And in the past 2 super cycles, from 1970 to 1980, 10 years, to 2000 to 2010, another 10 years, gold prices increased by an average of 1,400% over approximately 10 years. Now, according to Jim Rickards, respected economist we talked about earlier, if this 1,400% gain is applied to gold's low of 1,050 that we saw in 2015, we could potentially see the prices reach around $15,000 per ounce by 2026. Why are you waiting? Why are we waiting for this market? Get into the gold market or the silver. If the silver to gold ratio reverts back to 31, and this ratio goes back all the way to 3200 BC, it's a time-tested ratio. If we go back to a 30-to-1 ratio, and that's it, this would place silver at approximately $500 now, a staggering potential gain of 2,000%, 20 times your money. Do you have $100,000 in your portfolio? 20 times that. $2 million. This is where this market can do. This is what it could do for your family. I was talking about an opportunity of a lifetime. And if this is not the opportunity of a lifetime, I don't know what is. Please give us a call. Share some interesting facts. If you know another opportunity, we're open to it. If it's in crypto, please share. But we want to help you in the precious metal space. Nick, it was amazing having you on the show. Thank you so much for all that you have done on the show and for the accounts that you've opened up. Bright future ahead of you for sure. And to all the listeners, thank you again for tuning into The Real Money Show. Visit us, guildhallwealth.com, or give us a call, 1-877-8-SILVER. You've been listening to The Real Money Show on AM 640 Toronto.